Welcome to Fintech Insider. My name is David Brear. As you probably will have heard a few weeks ago on the news show, we discussed the launch of a banking solution specifically designed for influencers and creators called Expo. I made a couple of comments about influencers' earnings and questioned a few of them about whether that would be a long-term living or not, or whether the product itself was even too niche. What happened after that was Expo CEO pretty much called me out on it in a blog that he put up on LinkedIn and tagged me in it as well, which I thought was very elaborate. There was some myth busting around influencers, the creator community, and how much they'd really been left out by traditional financial services products. So what we wanted to do is bring on and chat about that, have a little bit of more of an understanding, try and dispel some of the pieces that actually we sort of see in the industry about influencers and really what that stands up to be. So please welcome to the show Lotanna Ezeike, who is the founder and CEO of Expo. How are you doing, Lotanna?
I'm good. I think I'm tired of the Twitter fingers and blog fingers, to be honest. So it's nice to talk to you.
Yeah, I mean, you were up early in the morning doing that, so it was clearly, get it off your chest and understand, which is good because actually it's critical to you're trying to support a community, right? So actually getting out there and representing the community is super important. But for everybody who listened to that show, and I know we covered it in the news in terms of what Expo is doing, but tell us a little bit more about why you started the business and actually what is the problem that you guys are really trying to solve?
Yeah, so we didn't actually start solving this issue. So we actually launched 3 times, and I think this third time we finally got it. So we actually started off as the usual stuff, connecting brands and content creators. It's probably thousands of marketplaces like that now. But we kind of used that as a learning ground for us to really learn what the real issue was. Ended up finding out that 85% of our campaigns were actually from content creators bringing external campaigns into our platform. At first you think, hey, that's some great stats. That means people really love our marketplace. End up talking to them. They were like, hey, we didn't really use you for new campaigns just because you paid us quicker. And I was like, oh, okay, cool. That's quite interesting. Talk to them more. And then there was one content creator we spoke to specifically called Grandy Cat. She's a fashion blogger herself. And I think she had a deal with Rhode Island at the time. So we were like, hey, what if I paid you 90% of that invoice tomorrow? How do you feel about that? Essentially normal invoice factoring. She was like, fuck yeah, 100%. Why wouldn't I do that? So at first we were like, hey, yeah, this is it. Then we found out so we were actually growing 30% month to month from probably like say January 2021 to about, March, April. Ended up finding out that, creators are giving us small value invoices. Like we're talking like, £800, probably 1,500 maximum. Then I did one crazy thing one day and I switched the pricing from 10% to 0%. I just wanted to see what would happen. Essentially, we got 2 months of invoice value in that one day. And wow. Ended up finding out that, hey, the real value isn't really from us charging them the 10%. The real value is actually the financial data that we get, which is extremely unique and actually really shows you or shines a light into how much content creators are earning. So essentially what we do is that we leverage that data and be able to actually help content creators know their worth, actually know what to charge, because right now they kind of just choose prices out of thin air. And also in the future, give them access to financial services because, I'm an ex-banker myself, used to work at Barclays, used to lead digital, end up finding that banks don't actually understand how content creators earn. They don't really want to or care to anyways. So we essentially become that translator, that broker where we actually broker the data and say, hey, that mortgage that you still this person wasn't good for, we can actually see from the earnings as a content creator that they are good for it. Or let's say that loan, for example, they said they gave them really crappy rates. We can say, hey, they actually have way more income than you think, essentially, and therefore they can give them lower rates. So that's essentially our goal at the end of the day.
It's interesting, isn't it? And maybe it's a great vision to sort of set out on, and like you say, you can really see how really these influencers are they're businesses. It's not just a person; it's a business. So when you start talking about invoice financing and being able to get paid ahead of the curve from a cash flow perspective, like these are SME, SMB problems, but people see influencers just as an individual, trying to, steer a community into buying a thing that they want to buy. So it is interesting that they have the exact same problems, right?
Exactly that. And also, yeah, they are businesses, but we're really big on saying, they're also people too, at the end of the day. So sometimes even when we spoke to investors, they're kind of like, oh, what kind of, financials or payments solutions that creators want. And I'm just like, the same as everyone else. They want mortgages, they want loans, they want car finances, they want access to those things. Essentially, they're not just marketing tools.
Yeah, and this is obviously, I mean, as an influencer yourself in at present, I guess being starting a business, that influence is not going to go away anytime soon. So, I mean, are you drawing upon experiences you've had yourself in terms of these are problems you've had, therefore there's a lot of other people out there with similar issues?
Yeah, exactly. So I was actually an ex-athlete myself. So I used to be a 200-meter sprinter for England, and that's how I fell into things. I didn't actually want to be a content creator. There wasn't actually a thing like that 5 years ago. Essentially, what happened was I was posting my training on Instagram, got quite a niche audience. Then all of a sudden, the likes of like Puma and New Balance reached out saying, "Hey, we'll give you free spikes if you tag us." A month later, it was like, "Hey, what are your rates?" And I'm like, "Oh crap, I can actually charge for this." And then you're waiting for the 30, 45 days. And I'm not used to this, or I wasn't used to that at all at that time. And, I can't really tell my bills to wait 30 to 45 days, can I?
Definitely not. On the other side of that is banks that won't listen if you don't pay them for the things that you want them to, like a mortgage or a house, right?
Exactly.
So it's interesting. I mean, the points I was sort of making on the podcast for me was about I worry, and maybe a kind of a little bit of a more broad conversation around influencers more broadly. My philosophy on being influential is that I try and achieve a thing and then be influential for the thing that I've achieved. And I think I worry a little bit. I've got a 9-year-old and a 7-year-old who will do whatever Mr. Beast says to do. You know what I mean? Like, so, whereas actually in my mind, I'm like, is that the career aspiration? Is that what they should be aspiring to be? Is an influencer, particularly, and I say this a lot on, if you look at things that I've kind of put on LinkedIn and Twitter, I really don't believe in fintech influencers who are just amplification of other things that are happening. Mm-hmm. Creators, for me, are a completely different thing. If you are, I think there are, there's consumers of content and there's creators of content. I think if you're adding value to the community and creating things in the community, I think it's a really different thing. But I sort of say that with a slight word of caution, and this is kind of what I sort of said on the podcast a little bit, was, there is a very long tail of revenue. Is that a misconception? Am I wrong in that, or is it easier than I think it is to have 20,000 followers on social media and then be able to generate sustained revenue?
Yeah, no, I think you're 100% right in terms of there is definitely that extremely long tail of content creators. There is that 0.5% who earn shitloads of money, to be honest, and then there is that definitely long tail. However, I think your point about them not really earning a lot of money, to be honest, is steeped in untruths in terms of, let's say, for example, YouTubers, right? They don't depend on YouTube ad revenue. Like no one really does anymore, like they used to before. It's more external brand campaigns. So that's why it's sometimes hard to actually track what content creators earn, because even the platforms themselves don't know, because these transactions don't happen on these platforms like YouTube and Instagram, and through that it's normally just like an invoice payment, which is actually that's why we actually get to see in real time what these creators are earning. So to give, for example, we have like multiple personas, but we have a persona of a stay-at-home mom. She does a lot of like interior design. She got paid, I think it's like 1.4k for 2 feed posts on Instagram, for example. Like her counterpart, who is not a content creator, is earning 0. So she's who's obviously like a stay-at-home mom at all. So she's earning far more than her own counterparts. Let's talk about another content creator. She's 18 herself. She's a shoe fanatic. She got paid, I think, 2.3k from eBay to do 2 feed posts on that end, and she earned, I think, 1.5k from that, which is just below what the UK average salary is, which is about 1.9k. But then if we actually look at the age group and the fact that she's a woman as well, her counterparts are actually earning about probably like 1.2 from 9 to 5 Monday to Friday for 4 weeks, essentially, through there. So this is something that she's very, very passionate about. So I think, yes, you are right that there's definitely that long tail, 100%, but how much they're earning, or at least how much some of them, or the people on Expo are actually earning, are actually close to what the UK monthly average is, and that's just on external partnerships through there.
Yeah, and that's amazing, isn't it? If you can do something that you're passionate about, do something that you love, and be paid to do it at the same time. It's the sort of it's the perfect crime at that stage, right? In terms of where they are. I guess in that sense, though, and the pain points, the real jobs to be done, you guys are kind of really addressing with Expo is actually turning that hobby into a business that people can really operate with. So how much are you guys looking at? Obviously, when you look at the you're doing lots of research, you've lived this problem yourself. How much are you looking at almost the SME market as the more mature version of what you guys are kind of looking to achieve? So, I'm thinking players like Coconut, players like Tide. Is that the direction that you can see the business growing in?
I think they are quite cool in what they're doing. However, how we really differentiate ourselves from other competitors is that we actually have an inherent benefit to our customer base, and we can actually help them become better at what they do. And no neobank does that. The reason why no neobank does that is because they don't really have any niche properly. So let me just explain. So for us, we focus on content creators who are just YouTubers, TikTokers, and Instagrammers. Those are the three that we exclusively focus on. And because of the data that we collate at the end of the day, we're able to tell content creators on Instagram, hey, did you know that if you increase your engagement by 2% on Instagram, you can now charge, 1K instead of the £800 you're currently charging for a story post. On a YouTuber, we can say if you increase your watch time by, 2 minutes, you can actually, basically just change one variable and they can earn more, essentially. So that's actually helping them earn more and earn more faster through us. And no other neobank is actually really helping their user base, because their user base is not niche at all. And I think the one reason we're able to do this is because when you're filling out an invoice, so let me just give you an example. Let's say we're both painters, right? And we've both done the same job. We've both painted someone's living room. What we may call it on an item on invoice may be completely different. I may call it, painting gig. You may call it, painting on Saturday. The system on the back end can't match that to be like, oh, that was actually the same job that they both did, essentially through there. With us and on our platform, when you're creating an invoice, we don't allow the creators to create their own item because we pre-fill it, because we know that if you're on Instagram, it's going to be, feed, story, IGTV, Reels. And that's all it can be, essentially, through there. And once we do that, we then know that, hey, we can actually match these 2-3 things and say, hey, these people actually did the same job. Because this person has more followers or more followers or more engagement, or their audience has a higher earning, wherever it is on that end, we can then come to them and say, hey, if you can increase this variable, you can actually earn more. So we actually have a 4-step process in terms of going to banking. So we're not a bank yet. It's a very, very, very long process. First step, get creators paid quickly. It's kind of like an acquisition model for us to get creators coming through, and it's completely free service. Number 2 then is actually helping creators become better creators. So actually give them insights that help them earn more. So for example, there's been a huge thing about the influencer pay gap or creator pay gap. What we can actually do is that if, David, yourself, you've put in an invoice for Boohoo for £500, a pop-up actually comes up saying, hey, we've actually funded Boohoo a lot of Boohoo invoices, and we can actually see that they normally pay £800 for someone with your stats. Obviously, it's just suggestive pricing, essentially up to you to decide whether you want to go back and renegotiate. Then the third step is that's a
really interesting point though, just on that, because most people, it's hard for creators to really understand their wealth, right? Or their worth rather. Yeah. So that's a really interesting piece, because if somebody, one person's charging like £15 and somebody else is charging £1,500, but they're essentially doing the same thing with the same amount of followers and the same amount of engagement, then so you're helping people almost understand their worth.
Oh, 100%. Whether that be, either increasing their prices or decreasing their prices based on actual factual data that we have, not just, kind of like pissing in the air and choosing something. And then our third thing is then compliance, because of the content creators they are here in the UK, probably 1% are trying to be compliant. And of that 1%, only 1% are actually doing it properly. Some of them just kind of use QuickBooks and Xero and then, just upload random documents and hope everything's A-okay. So we just want to have something simple and light touch, like how much the taxes will be. And then maybe in the future, then ring fencing that for them, so they don't have to do the calculations themselves. And then the fourth step is then obviously banking those content creators, which comes in twofold, right? First fold is, without essentially the banking license, where you can then broker the data to credit bureaus, lenders, etc. And then the second step is actually providing those financial services directly to the creator, which is where things get really, really fun.
Yeah, no, it's super cool. It's the point you were making around the niches. Do you think this is where, obviously you've had some time at Barclays and a big bank as well, actually, are you seeing, and we see, globally, we're seeing players like First Boulevard aiming at black people, Daylight aiming at LGBTQ, do you think sort of this is really the evolution of financial services? Because when anybody can now be able to create a financial services organization, and actually the competitive landscape is getting more competitive than ever, people kind of want to bank with people who really understand what they're trying to do and really understand how to be better at that. So do you think this is the direction of travel for financial services?
I think it is. I think it was the same thing with marketplaces, right? Craigslist and eBay came with buy and sell everything. And then other people who, came in with their own niches and owned that and took market share from the big guys, essentially. And these big banks have never had a niche at all. And there's different personas in life, in our society, that want different things and want that inherent benefit to their persona, essentially. And I think that's 100% where it's going to. When it comes to, even for us, when we want to lend as content creators, there's actually a benefit for them because, right now, let's say, David, if you applied for a loan, they either tell you yes or no, right? If they tell you no, they don't really tell you the reason why at all. With us, when we're able to bank the content creators properly, and because of the credit risk assessment we can actually do ourselves and our algorithms, if we say no, we can say, you have to say you apply for a £10,000 loan. We can say, hey, you don't qualify for that right now, but you do qualify for a £5,000 loan, for example. And then we can then say on top of that, these are the payment plans. However, if your next YouTube videos are over 100K, let's say the next 5 YouTube videos are over 100K, you will be able to get that £10,000 loan, which is amazing. But then on the risk side of things, right, because what most banks want to do is actually limit the defaults. Because you're invoicing through us, we can actually see your propensity to actually default on a monthly repayment. And actually on the spot flexibly restructure the loan agreement because we know how much you're going to be earning this month as well. And what's great, even probably more for us as Expo, and probably lenders will love, is that we ourselves can take the money out before the money actually lands in your account. Kind of how you get taxed through there, which actually makes it even way safer through that. But obviously that's a very, very regulated industry. We might actually start off. So I was actually speaking to Justin from ClearScore. We might actually just start off with what ClearScore did themselves, which is just outside the regulatory boundaries and just brokering that data.
Yeah, I mean, it's fascinating and an ever-increasing thing as well, the sort of plethora of different social channels. Which channels are you particularly focused on right now? I spend most of my time on Twitter and LinkedIn, but it sounds like Instagram is probably the place for more monetization at this stage.
Yeah, Instagram is definitely our number one spot. Then YouTube, then TikTok. So those are top 3. Twitch is something I'm definitely heavily looking at, just because my little brother is actually a huge Fortnite player, and he actually won some money, and it's taken like 8 months for it to land through there. Right. So I'm just thinking, invoice finance for them will be really, really great, especially if you're able to partner directly with Fortnite and then be able to do the prepayments through there. But definitely the top 3 is Instagram, YouTube, and TikTok.
Sounds good. Well, I really, really appreciate you reaching out. I really, really appreciate you writing the blog. I can see this succeeding, and like say, this niche can definitely be successful. Coming back and let me know when you're doing LinkedIn, because I think at that point, then I'll be up for this. In terms of where can people learn a little bit more about what you guys are doing, and where can they find out a little bit more information about you as well?
Yeah, for me is LOTTS XPO on all platforms. And for the brand, it's just Expo app on Instagram, and we post quite a lot. I'm also on LinkedIn as well as Lotanna and Ezeike.
Very cool, very cool. And congratulations with the success. It takes a hell of a lot to start a business and get it going. It's an amazing thing in itself, just sort of doing that, isn't it? It's an interesting transition as well, from sports person through to sort of business person. It's a pretty cool transition, huh?
Thank you, man.
No worries. All right, guys. Well, thank you very much for joining us on Fintech Insider. You can find me, as I just said, over on LinkedIn predominantly these days. I really should think about opening up another Instagram account, shouldn't I? And see if Lotanna can help me on that one. But thank you very much for listening, everybody. If you want to join the conversation, you can find Fintech Insider and 11FS on pretty much every social media channel at this stage. Or if you really want to, just email us on podcasts@11fs.com. Thank you very much for listening, everybody. Goodbye.